She's got the names that can ride out this wave of uncertainty. Julie Biel is Chief Market Strategist and Portfolio Manager at Kane Anderson Rednick and a CNBC contributor. How frustrating is a day like this, Julie, and a week like this? Welcome.
Thank you. Yeah, no, I think this is actually one of those markets where you really have to have a lot of conviction, and that is what allows you to stay zen. That's the real key. Is you don't want to just be doing things for the sake of doing things. It's the opposite of the old adage. Don't just do something, sit there. As long as you have good quality companies, you should be able to ride out this turbulence.
That's another kind of a deep allusion there to Buffett and Munger, who famously said, inaction is the hardest thing. You're trying to emulate them in other ways, too. Tori, what was our mystery chart? Julie, what was our some of your stock picks? Okay. That's not one. Advanced drainage, Julie, is what we were teasing today. I don't think anyone would have guessed that. Why is it on your radar?
Yeah, I think there's so much excitement and hype around AI. And I really do think that is going to be very transformational technology, but I also think it's going to be really flattening technology in terms of suddenly it's going to be really table stakes to have a high level of information access, analysis, optimization. And for me, I'm really much more excited about companies that are grounded in the physical real world, right? AI isn't going to fix clean water the way that advanced drainage and their pipe solutions are. So I think companies that are really grounded in the world that we have are actually more compelling to me because they're better able to differentiate themselves. Simpson is another great example. That's a company that has 70% market share in the kind of sure tie, strong tie for structures for home building, or something like a West Pharmaceutical, which manages the injectable drugs. It's the drug delivery systems. We know that there's going to be more injectable drugs. AI isn't going to really touch that, and so it's these kind of real-world companies that I'm really attracted to right now.
Yeah. All of that said, do you look at the broader economy right now? Some of the data points lately on the consumer, and none of these stocks are really consumer plays, but there has been a bit of a weakening.
Absolutely. And I think that it's really important for us to bear in mind that while we look at all of the data around infrastructure spend, manufacturing, all of that, what's so critical is to recognize that we thought there was going to be a recession in 2023. We think that there are so many challenges facing this market. And the fact of the matter is, it's the jobs market, stupid, right? The strength of the jobs have really been what has propelled this economy. And it makes sense. This is a consumer-driven economy. The more that we can recognize that the health of the jobs market is what really is going to determine our fortune, especially in the near term, I think the better we can all recognize that.
Yeah, I also thought we were going to have a recession then. It was amazing that we skirted one, although in hindsight, if it was fiscal, we had a big debate about this top of the hour, right? Is it better for the economy for us to kind of push back on the size of the government, on the size of the federal workforce, put that into the more productive private sector or not?
Yeah, I think that we have this tendency of we really don't want to have cycles, but cycles are kind of a natural function of Earth. It's a natural course of action, and there is a lot of good creative destruction that happens in cycles. What we want to do is we want to kind of let the companies that are not good companies, the zombie companies, fail, and we want to take care and protect of the employees. That's where we really want to focus ourselves. I think what concerns me and what concerns lots of people is just the level of deficit spending that we have. It doesn't really give us a lot of levers to pull if we do hit a recession and we do suddenly need to have fund unemployment to a much more robust level. I think that's just a really natural concern. And, I understand the need for more government efficiency, and I think that's tied to that.
So let's kind of back out then. You look at the small caps. That's one area where people were hoping for a lot of catch up, but they just continue to struggle a little bit. What would you say about the prospects for that part of the market, or kind of for stocks here more broadly while we navigate all this?
I think what's really important to bear in mind with small cap is to think about the makeup of the index. One, there's more leverage, and more of that leverage is floating rate debt. And so they are more sensitive if we're going to have higher interest rates for longer. The other thing is there's a big makeup of real estate and banks, right? And so there's some sensitivity in there that we have to kind of think about. The last thing I would say is small caps have a really high proportion of non-earners. And so for us, I think really small cap is a place where passive doesn't make a ton of sense. You don't want a ton of exposure to these lower quality companies. You can find high quality businesses in small cap. You just have to be really choosy.